price levels. Now, price levels are the same thing as support and resistance levels. But too many traders get lost in the word support and resistance, because as the price moves up, it could be a resistance level, but when price is coming down, it becomes a support level, and vice versa. These levels also are not predefined exact points. There are zones. Now, there's many ways you can get these levels. You can get them from pivot points. You can get them using a Fibonacci retracement tool. You can get them from moving averages. There's many ways to obtain these. You can even use them from trend lines. I believe in one way to establish the important price levels on a chart, and that's what I call eyeballing. Now, so these support and resistance, or these price levels, are horizontal levels in which price has had a problem either passing through, bouncing off of, or soared right through, or had many times where it touched in the past historically. And the more farther back we look on our charts, and the more times that that price held in the past, the more valid it is in the future. And the reason I believe in eyeballing is eyeballing makes you work with your charts, makes you be familiar with your asset, and makes you be individualized. You know, pivot points are a mathematical calculation, and everybody has the exact same pivot points. A moving average is a calculation. Fibonacci's are a calculation, and they're done mechanically for you. Support and resistance levels, or price levels, from eyeballing forces you to go back and look at your charts, look at price and how it reacted each time it hit this particular price zone in the past. And this is what makes you a better trader. When you have an understanding of an asset, when you have a connection to an asset, you can interpret what price is doing much better than any mechanical type of tool. Now, the difference between support and resistance and support is easy to comprehend. If you imagine you're on an elevator and the floor below your feet is what's holding you up, and the ceiling above your head is what is resisting you, because you have to break through that ceiling to get to the next floor. So as that elevator is moving up, you're going through that ceiling. When you get through that ceiling to the next floor, what happens? That ceiling becomes the floor under your feet, and the next level becomes your resistance. So the floor, the ceiling that you're standing on top of, which is now your floor, was originally the ceiling from down below. It was resisting you, now it's supporting you as the elevator is moving up. When the elevator turns around to come down, guess what? That floor below your feet is what's resisting you, because you have to break through that floor. And in order to do that, you have to go down, 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 down. You have to break through the floor, and the next ceiling will hold you up. Well, do you think about all of this when you're on an elevator? No, you just know you have to go up to the third floor. You got to go up the elevator, go through the first to the second to the third. When it's coming down, same thing. Now, I live in a 4-story building. I live on the top floor, in a small building. But I can look at the elevator, and when I can see the button when I go out to get on the elevator and it's a 2, okay, I know most likely there's somebody getting on at a 2 and they're going to go down. So I have to wait for it to go down, drop them off on the ground level, and come back up to me. Why? Because I've done this through years of living here in observation. I know when I get out there to push the elevator button and it's on 0, it's most likely sitting there empty, and it's come right up to me, pick me up, and take me right back down. Okay. Well, this is through observation. Well, that's exactly what happens with price. So by observing it historically, we can determine price levels or the floors of an elevator that will be important in how we can expect that elevator to react. There's no guarantee, because that elevator might be sitting on 2 and empty, and it might just come right up to 3. Or it might be on 2, dropping people off and just coming right up to 3. It might be on the ground level with somebody getting on there who's going to stop at 1 and somebody else can get off at 2, and I have to wait and wait and wait and wait. Okay. But historically, as statistically, I can evaluate the situation. So let's go over the live chart. Okay, now on my chart, and these are my own color codes, okay? I'm not going to tell you what they are. I'm not going to tell you what they stand for, but all of these gold, red dashes, blue lines, solid red lines are historical prices that when the asset, and what we're looking at is my teaching chart, the euro US dollar, was trading at these levels in the past, that these price levels were important. Here, we can see right here, look how important this level was. Look again how important that level was here. Going back. So what happens is, back here, when I noticed that this level was important and I put this red line on, it's projected into the future. So each time the euro came to this price, we waited to see if we got a reaction. Look at this, it hemmed and hawed there, but went straight through. Here, look where we have the lowest low. Okay. And you can look at all of these different prices and movements over time and see how these levels held price. Doesn't mean price can't go through it, but this is the elevator either going up or going down. And do we have one person on the first floor, 2 people on the 3rd floor? How fast is the elevator going to get to me? What's it going to hem and haw? So statistically, we can figure these out. Now, my red lines, blue lines, gold lines, dash, dot, are personal color codes, personal keys for me. Okay. They tell me how long ago were these lines put on my chart. Red were 3 months ago, blues were 6 months ago, green, and I'm constantly updating the colors because that tells me how long that price has held. Dotted lines or dash lines, okay, tell me if it was a significant price level or not a significant price level in the past. Now, look at this red level right here. Okay. Now, this level was projected from way back when up front. Now, as price moved up, look how important this level was. Price came back down, and this is today. And look what happened at that level. Price now fell back down, and it's moved back up. So I know something's going to happen at that level. Now, you notice I didn't use the word support or resistance because I don't care what it is, because my brain automatically tells me whether the elevator is going up or down. So my brain automatically knows whether it's the floor above my head or the floor below my feet. Too many people get so involved in trying to say, oh, well, you said that was support. I don't care whether it's support or not. I care the price is moving up and it's above that price. So when it's above it, it's supporting it. When it's moving up towards it, it's going to be resistance. When it goes through it, it's going to become support. So we can see here, let me just get these markings off of this chart. Okay, you can draw these on real quickly, but to get them off, you have to click on individually. Okay, so we can see here each one of these levels, how price held. Okay, here, historically, this is going back to April. Okay, look at when price was moving up, it started to congest and go sideways at this level. Move back up, and we got a sudden reversal here. Bang, bing, 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 bing. Well, now we can start drawing our lines on it. We drew our lines for a short-term support and resistance. And now look moving forward, how much accuracy we've gotten by knowing where those lines were. Okay. Again, here's a short-term chart on the Australian dollar. Okay. By knowing where these resistance structures are or ceilings, look at this price moved up, hit the ceiling, came back down and went back down to the floor and then tried to go back up to the ceiling. Okay. And each time we see this in between, we can ascertain certain things that we can expect price to do. We can also predict future movement. If we were looking here at buying, say at this support structure, and we got a buy indication, where would we project our next impetus to be? Here at this level. And then as it broke through and moved up farther, we would then predict our next level here. So it helps us set targets. It helps us set our stop losses. It helps us watch the journey of an asset. So once again, there are many ways to get these. Okay. But the most important, like I said, is eyeballing. Now, eyeballing sounds like it's lots of time and very time consuming, but it technically isn't. Because once you've got these levels on your chart, no, say for instance, the euro has been bouncing between 106 and 136 for years. Okay. Once you have them all on the chart, as the euro goes towards 119, 120 again, those levels are already dropped on there. When it falls down to 114, your level's already on there. The only time you have to draw on necessary new levels is if the price has reached a place it hasn't been, or you're filling in or defining shorter term levels. But all of these will help you determine buy and sell areas. So eyeballing is not difficult. It's just a bit time consuming. So I'm going to share with you a little presentation I've sped up and cut down and everything, but show you how to do this real quickly so you can get your charts ready to work for you. as you can see, it was a wee bit time consuming. It's a little bit boring to watch. But you see, if the one other thing you would have done is while you were putting those on, if you would have color coded them as you're putting them on to which ones were more significant. Now you can see when we drew the circles around those, you can see that lots of prices over that range were very important many times over, and they stayed at that price. So that was a significant. So if you color coded them in the future, you would then know which ones were more important and which ones were less important. Okay. And then if you also use your dashes and your dots and everything else, you could tell whether you put the line on in 2020, whether you put the line on in 2019, and you can also use the thickness of a line to tell you how important it is. Once they're on there, they're on there. But it's important. But now that we know the role of support and resistance, which from now on we're going to call zones, because you cannot get yourself stuck into saying that the euro has a resistance level at 119,421.2. That's 4 digits to the right. That's tiny little pips. But it doesn't, because you see, when we encapsulate and circle those levels, they were general levels, because price doesn't always stop exactly at. If you just wanted to say, okay, I'm going to reach resistance of 119,444.27, well, you're going to be wrong. But if you said to yourself, I have a resistance zone around 119.47, then you will make sense. And so I always think of them as zones. Okay. Sometimes, like you saw when let's pop up my live chart again. See how here the structure is filled like a zone. So you don't get yourself stuck in a single price. Now here on my teaching chart, I have them in as specific lines. Okay. But I never, ever look at the price. Come on. Of that specific line on my chart. Okay, I'm more concerned with the zone. It's a breathing zone. It's an area. Okay. And if you keep that in mind, that it isn't a specific price, you'll find that your trading decisions are much more accurate, and you make more intelligent decisions. So remember, they are more like zones that can be reached and pushed into. The trend may pull the price action back out of it. The price action may succeed in breaking it for good. But this is why we think of these as zones. Okay. Because remember, when I was showing you on the live chart and showing you where price was today, you know, there was wicks going through it, there was candles going through it. Sometimes the candle close or open was right on it. Sometimes it was a little lower, because in my mind, I'm seeing this zone. I'm not seeing this line. Now, today we're going to talk about a support and resistance or price level strategy, which will enable you to take trades at the area where price should reverse. Now, trading support and resistance are critical for every trader to implement in your system. Now, you don't have to trade. I personally trade from chart patterns and support and resistance. This is the way I am, and price action. Okay. I don't trade from technical indicators. I'm not saying they're not worth it. I don't trade from moving averages. I don't trade from Bollinger Bands. I'm a pattern trader and a price action trader. Okay. And I use support and resistance for everything. Now, I'm going to guide you every step of the way. So follow along as we cover the support and resistance trading. After you learn the strategy, you'll be able to identify these sweet spots where price action should happen. Now, our indicator for this strategy will be price action and its relationship to these price levels. And to be honest, this, in my opinion, is the best way to trade price level action. So what exactly are these key areas? How do you trade these areas? Before we explain the strategy, we're going to define support and resistance, which we have just finished. So let's go. Let's start looking at how we might trade them. So our first step in this little easy strategy is to draw these lines on our charts, okay, which we've just gone through in great detail on how to do this. After you do this, it will resemble support and resistance indicator. Only you now have the zones to take advantage of. And what's happened is when you've drawn these on your charts, you and price action and that asset have become very familiar. You also have an understanding of these levels and why, which ones are significant to you. And your levels and the way you draw them on are very personal. Now, if you gave me a Euro US dollar chart today, gave me a blank one tomorrow with Euro US dollar and a blank one from next week, and I had to go back and start from scratch drawing my support and resistance line fills on it, they would almost be identical because over the years I've developed my way of finding these and drawing them on charts. And that's what makes my trading individual and is what gives me the edge over other traders because these levels are my levels. So the first thing is drawing zones on charts is better done in higher time frames so that we can examine the main reversal levels and the more critical points on our chart. Okay. Now, for instance, for our type of trading, CFD trading, short-term trading, I make my trading decisions looking at a 1-hour chart. I make my trading determinations looking at a half-hour chart, and I usually define my entry points and my exit points using a 15-minute chart. So where do I draw my support and resistance lines on? I go back to my 1-hour chart. It's also a lot easier to go back historically. And if you're going to draw these on, then if you're going to do a 15-minute chart, you're going to have to go over lots and lots of 15 minutes. And the fact is, as long as the price held over on a 1-hour chart, that price will still be and will still hold. Those prices don't adjust or change based on your chart. So here we're looking at a 1-hour price chart, right? My Euro US dollar teaching chart. Now, if I click this over to a 15-minute chart, those price levels still remain exactly where they are, but I can see them more precisely. Oh, let's get this damn thing. Go away. This thing won't turn off. Come on, brush. You know what? There we go. It will. Okay, there we go. Sorry about that. That was odd. But see, these levels still held true, but now I can see how significantly important the gold level is right here. So we can say that's at 117.72. Okay. We can define the levels above and below. We can see how they held in those 15-minute charts. We change it to a 30-minute chart. We can see more precisely. But we drew these on my 1-hour chart because 1 hour is what gives me the environment. And a 1-hour chart, I can see the environment in which the asset is moving. So at this point, okay, I can see that we had a short uptrend. We moved into consolidation. It gave back most of its gains, and now it's moving back in that uptrend. I would not be looking to take a down trade at this point. Okay, I would be looking for it to break through resistance or support of this gold level, possibly to move up. Okay. But I wouldn't be looking to trade the bounce off of there. But I would be looking to trade if it fell down, say, my blue level and bounced off of there, and I would take a short uptrend. And then if it reached my gold level and bounced off of there, I might take a short downtrend to my blue level. So when you are doing support and resistance trading, a line with multiple touches is far better off as it stood against the price and passed the test many times, and it will continue to do so. Why? Because history always repeats itself, and this continues to happen time and time again on every chart that you will ever look at. So to make sure to leave spaces between zones, as drawing many lines will confuse you and worsen your decision. This strategy could easily be compared to our red zone strategy that shows you how to use and draw zones on your charts. When you take a look back after drawing zones, you will find that these lines withheld the price numerous times before and will continue to do so numerous times in the future. So once we have all of these zones on our charts, the second step is waiting for price action to touch the zone. So like I showed you on the chart, when it moved up to that major gold line and bounced off of it, I might consider a downtrend. When it fell down to the blue line, I might consider, bounced off, I might consider a short upsell. But these don't move quickly. So the second step is waiting for price action to touch the zone. What you can do is set up 2 or 4 charts and wait for your chance. You can set up the euro dollar, euro pound, euro Japanese yen. It depends on what you're trading, but especially cross currencies, and watch for them, because it's going to take a while for either one to reach a major support or resistance. And a lot of times it'll reach it and break through it. A lot of times it'll reach it and stay and go into consolidation, because you have to determine the difference between consolidation and a momentary indecision, and its price is going to bounce through this support and resistance levels and trade in that zone. And sometimes when it gets in those zones, you can get 6 and 8 trades in a day. Okay. And you don't keep multiple trades over. When it moves up, it touches your upper price level zone, you close your trade. If it bounces off and comes back down, you open your sell trade. And you can find when price starts to get this, especially if you're watching stocks. Sometimes stocks do, but it does it very slowly in stock. But you'll see it in currency, and you'll find that when you're trading lots of cross currencies, you can always find something that's approaching those zones. So basically, the higher time frame takes less time and attention than the smaller time frame. Alternatively, the smaller time frame has more signals, as the zones may get hit more frequently. Now, to trade a support and resistance level strategy and try to jump it onto 5-minute charts gets really difficult, because it's bouncing through, it's hitting those levels too often and bouncing through them, bouncing off of them, for you to make a intelligent, quick decision. So you hear, this is a 5-minute chart. Okay. It gets to be there's too much action happening there. Okay. If we stay at a 15-minute chart, you get to see more clearly what is going on. So if price reverses, that will be good if it hits the upper price level zone. And it's what we're expecting. We will need a strong reversal candle, though, to assure that price will reverse and that it will not collapse back down again. So you can't just arbitrarily trade when it touches that resistance zone. You can't arbitrarily trade because it touches it and falls back down again. You have to have decision makers. And in this case, a lot of times a reversal candle will help you make that decision. On the other hand, if it breaks that level, it may be really breaking or false breaking. So we also want to see a strong piercing candle that effortlessly breaks that level to assure that it may continue in that same way. So the third step for the strategy is to wait for the candle, which has hit the zone, to close. So first we have price moving towards the zone. We need a candle that closed on that zone. And this will indicate the signal candle we are waiting for. Look at that candlestick pattern and ask yourself, a very important question. Is it a bullish or a bearish candle? Is it strong or weak? Is it big or small? Does it have long wicks or small wicks or no wicks at all? When you can identify the kind of candle, then you will be able to decide whether to sell short or buy long. Knowing the type of candle is crucial to identify whether the entry is valid or not. So how do we know it's strong and what's the secret? Before we go any further, here are some important factors in determining a strong candle, because spotting that specific candle on zones makes the difference between winning and losing trades. So this is what a strong bullish candle is. Okay, it reverses, takes out at least the previous candle, if not the previous two candles. It has a long body. So the quality of a strong candle, or number one, long body, formed after the previous candle touched the level or the zone, but it could not break it, and it's entirely taken out the two previous candles. You need this specific thing to happen before you can make a trade, because otherwise you're just arbitrarily guessing. Because we get lots of weak candles in support and resistance, and they'll end up closing at, then they'll break through, nothing will happen. You need to have the rules. What? After a candle touched and closed at the resistance or support level, the next candle is the opposite color. The body takes out the two previous candles. Okay, and then we can enter a trade in this direction. You would want to exit your trade at this point. Now, even though it might break through, this is where you'd want to exit, because on a support and resistance price level strategy, you're using the support and resistance levels as your determining factors, because you also have to have something to determine what your target is in order to set your risk reward ratios. So remember, we're looking for strong reversal candles. Now, step 4, because we're not finished yet. You haven't made a trade yet. Okay. Step 4 is identify where you will enter the trade. You want this to happen at the pivot point or the turning point. So here is the entry criteria and the exit criteria. Your entry should be slightly above or below the signal candle, which is the strong candle. This way, you're adding more confirmation to your trade to make sure that the price will move towards the direction you expected it to. Our stop loss should be placed on the other side of the zone and not too close to the price level to give it some space. So you can see here exactly how it is done. So let's review. First, we put our levels of support and resistance, or our strategic price levels, on our chart. Then we wait for the price action to touch the zone. Then we wait for the candle. We identify where we'll enter the trade, and then we identify where we would exit the trade. And so we now have our entry point, our exit point, our risk reward calculated, and our stop loss determined. So now that we have learned from the support and resistance zone strategy, okay, and we've learned how to draw the zones and how to trade them successfully, we've also learned how to determine the direction the price will probably move so that we can have a better edge in our trading. Trading support and resistance, discovering support and resistance zones are pivotal to your trading success. Now, I'm going to show you quickly the step-by-step process on a chart of determining this. So hold on, let me. And there's no voice. The instructions are just down below, but watch it as it goes through the quick little